What is up, guys? Kevin Cage back with another XRP update. Let's do this one take and uncut, and also comment down below your favorite DeFi project that I should look into. In this video, props to all that can stick around for this one. It's going to be jam-packed with info. I will also talk about a few of my favorite DeFi projects. DeFi, decentralized finance. Of course, in my previous video, I talked about AVAX. Whenever I talk about AVAX and, Avalanche, Avalabs, and Flare Networks, of course, I'm essentially inferring XRP, but I want to talk about a few other assets as well. So in this video, to break it down, I'm going to be talking about the real estate market. As we know, tokenization is actually already here and in live production for certain areas of the commercial real estate market. And the entire real estate market is valued at roughly $217 trillion. Well, just in the previous video with Avalabs showing approximately $800 trillion is sitting there, locked, dormant, in trapped liquidity as we call it, and Flare Networks, even on Twitter, their tagline is unlocking value. What do you think happens when all of this trapped value measured in the hundreds of trillions is released into the global markets of the Internet of Value? I believe Jevons paradox absolutely takes place, and I can think of one asset for sure that I know is positioned and has been for several years and is becoming more decentralized over time to provide liquidity on demand, so to speak, if you catch what I'm throwing. So we're going to be talking about Digital Currency Governance Consortium of the World Economic Forum in this document. As we know, Davos is occurring right now. We do know that Ripple, Cardano, and many other groups are regularly in attendance. That is what I'm betting on. I'm betting that the wealthy and connected people are going to make this happen. The net zero emissions with the XRP Ledger Foundation and Energy Web Token partnerships. Look at Energy Web Token, look at backing. I'm betting on those massive institutions as well. And I think that carbon emissions is a concern, as it's been talked about in the sustainable development goals for years. Smart cars, we already know the internet autonomy, the internet of assets, the internet of automation. We've been talking about this for quite some time. So being positioned now is absolutely key. In the meantime, sharpen your sword, level up your knowledge, and get ready for a very exciting few months ahead. So we talked about digital currency governance, 80 groups, blah, blah, blah. We also know the digital currency initiative that has obvious Algorand ties that we've talked about in the past. Ripple, Cardano, you name it, a lot of these groups. So we'll kind of speed through that. But first, let me talk a little bit about Korea. So Stephen Bolte up right here. Notice just talking about Koreans, which platform they use. I think this was lost in translation, but overall, just the exchanges that they're regularly using is Upbit, Bithum, Binance, Coin1, and Corebit. And I want to show you that essentially South Koreans had a little vote, and they essentially said they liked XRP more than Ethereum in terms of trading. For good reason. I'm sure you guys in the space are familiar with the gas fees that are just outrageous. In 2015, Ethereum was amazing technology, but now that it's actually pretty high in value, and to be clear, I believe Ethereum will go much higher in the years ahead, I just still am not a fan of fees. And if there's a better platform with lower fees and, different benefits, I'm going to go with that as well. So I know many people are looking at ADA, Polkadot, a lot of different platforms. There's going to be more than one winner, to be clear, but just pointing that out. As we know that we already saw the stats months ago that more and more institutional traders were using XRP as a bridge asset between exchanges because Ethereum was too expensive and Bitcoin was too expensive. And with XRP, you're paying fractions of a penny. So no brainer. And that is what I call utility. And that's even from the retail side. So very cool to see that. So we can see this report on cryptocurrency markets, and specifically South Koreans essentially just voted that Bitcoin was first and then XRP, and it beat the rest of these assets. We see Atom, great project, EOS, Bitcoin Cash, etc. Wanted to point that out. We can see strong XRP demand in Japan. I feel like every other day we're either talking about Japan, Singapore, or some other region in Southeast Asia that is just popping off for crypto adoption. By the way, there's a fly flying in front of my face right now, so I'm just waving it. Anyways, so we know Japan, which has hosted many hacking attacks, including Mt. Gox, has strict regulations on crypto. But the thing is, they're not strict. They are actually a lot more clear, and that's going to actually allow the government and different entities and corporations to actually succeed because they have rules of the road. They're not afraid, and they know exactly what they can and cannot do. In the United States, with uncertainty, it actually dismisses and discourages is the word, innovation. And that is so true. Why do you think the dot-com bubble, the US was a leader, or even in the fintech space early on? Now, this ambiguity is what is limiting the United States. And I'm from the US, and to be clear, I'm just rooting for innovation across the board. I would love for the US to be a leader in this as well, but hey, at the end of the day, I'm an investor. I am an investor, and I'm looking for an ROI. All right, and hopefully we can all help each other get one in the future. So it's believed that individual investors in the country therefore turn to platform-based projects like XRP. We talked about SPI, you know the name. Right here, strengthening in Malaysia and the Philippines. We know about the corridors being built, specifically the Philippine peso. No brainer, live, exciting. Looking at a lot of, what is the other exchange? BitCub. I know we looked at some of the ODL partners as well, exchanges, but nonetheless, guys, we are seeing live adoption. And just to repeat one last time, and I won't say it again in this video, XRP's done $2.4 billion in notional value for institutional users. Not us fun, speculators and buyers and investors. Actual adoption for remittances to lower the fees for people that need it most in the Mexican corridor and the Philippine peso corridor, throughout Australia and the US. Very, very interesting. All right, so we went through that. Now I actually want to talk about this. So by the firm count, it's a whopping 217 trillion total for the entire real estate market. Now a big portion of that is, of course, residential property. And as we've shown in this channel before, commercial real estate is obviously a lot easier to tokenize than residential real estate. So there's going to be an order of certain things that can be tokenized. We've talked about the capital markets and the world of trade finance, ownership rights of intellectual property or art. Everything will be tokenized. We know the benefits. If you wanted to buy, $3,000 or $4,000, like your favorite Amazon stock, and you only had $1,000, well, now you can own 0.3 of it, or 0.25 of that actual asset, and still have some exposure into other assets. So it's very nice. It's a no-brainer in the equities markets for shares. What's going to happen for properties too? Instead of a 500 unit building, maybe you only wanted to have a very small fraction of it just to have some exposure, or kind of like a real estate investment trust, a REIT for those of you that have purchased them in the past. You might be able to get even smaller fractions, and instead of 10 properties, you can own 100 properties and be better diversified and better hedged, so to speak. So this is happening. This isn't conspiratorial, and again, liquidity will have to interoperate between all of these systems. So hopefully you guys understand how big this is for the future of crypto. And I guarantee you, if you don't think this is like legitimate and the crypto asset space is here to stay, you're going to be coming back in the years ahead, because it's only going to be getting bigger. So the important thing is having exposure now, having a plan, doing research, and staying on top of all of this, because in my mind, there's no turning back. You cannot put the genie back in the bottle. And this is what a lot of people at Ripple and many other organizations have been quoted to say. All right. So global value, talked about 217 trillion, 36 times the total value of gold ever mined. We talk about gold, you talk about Bitcoin, the store of value narrative. Well, what do you think XRP and other assets that actually perform utility and can appreciate with more value on their network will do when you're talking about hundreds of trillions of dollars? We're not just talking about the silly pre-funded accounts and reducing the nostro vostro and the float of trillions of dollars trapped. We're talking about utility in a variety of markets, and the new markets that would explode. When the internet came to be, what happened? Well, we had new applications that were built. What happened to these applications after that? Well, then there were new businesses built from those apps, and it was just this Cambrian explosion that kept fragmenting and fractaling off of one another. That's exactly what will happen here. So I'm not going to be able to speculate how big it's going to get, but I think it's going to be bigger than we think. And if I haven't said it already, just like Christine Lagarde, the current president of the European Central Bank, has said, in economics, things take longer than we think they will to happen, but when they happen faster than we think. And I'm not sure if I already said that. I think I said that in the earlier video, so apologies if I just repeated that. All right, now right here, DJ Peter Voss, a must follow. I should retweet this. I thought I did earlier. Oh, computer froze. Okay, he doesn't let me retweet. Maybe that's weird. But anyways, I'll show you guys this. This is a really, really good article. Please check this out. And also right here, yeah, Rich, developers check out. We have this article on using assets and smart contracts in real estate. We showed you that other real estate platform with Algo. Please check it out if you have not. Of course, NFTs, non-fungible tokens are going to be huge in the game. Like all you gamers out there, get ready, because you might be able to make some massive money as well if you're properly invested. One of the projects that I like that is interesting, I do have to do more research on it, is UOS. All right. I do hold it, and I do know it is available on Bitrue. So first things first, guys, real estate is ready for tokenization. Yes, it's already live in certain sectors. Just so you guys know, this is not speculation. One of the industries where tokenization will soon be a game-changing is the real estate sector. Using blockchain, it is possible to tokenize houses, apartments, and properties and represent them on the blockchain. Just like anything, this will shake up the real estate market and inevitably change this rather traditional industry. Now, if any of you are with law firms or lawyers, stay tuned because this also will affect you as well. And blockchain, DLT will literally shake all of these markets for the better if you're, accurately or, wisely positioned. Blockchain has great potential because it creates trust and helps shape a world of frictionless transactions. Transactions don't have to be value, guys. They can be messages and data and texts and emails. It's anything, pictures, whatever. Tokenization will solve, among other things, liquidity problems in the commercial real estate sector. Interesting. Right here, a single update on a single server of this entire network results in simultaneous updating of data on all services. Enter DLT. Transactions on blockchain-based platforms can never be changed, never be altered, never be deleted, etc. And tokens can now be linked to these transactions primarily as a digital representation of the assets, the money, the securities, the contracts, whatever you're signing. So this is going to change the game. Now, keep in mind, each network's different. And if you're on a network where they cannot add more tokens and inflate the supply, then you're good to go. So that's what I'm alluding towards. There's going to be some private ones for certain companies to do in-house processes and maybe just help, overall reduce the operating expense. But overall, there's going to be global networks and companies such as Ripple that are enablers of all of this process. And when you can enable and be that bridge and bridge the gap, you can absolutely explode in value. So I'm excited for a potential Ripple IPO as well. In my mind, I think XRP has much higher upside, but I'm still going to diversify when I can. And I did not take part in any of the, early stuff with EquityZen. I was given the opportunity, but I decided to go into some other assets that are up massively. So I'm going to speed through this right here. In addition, a large number of intermediaries, middlemen, or as I like to call parasites, just leeching fees, and they served a purpose in the past, but nowadays some of it is being obsolete. Not 100% of middlemen are redundant or not needed, don't get me wrong, but there are a lot of spots that can be replaced altogether. So lawyers, brokers, financial institutions, etc., still cause, to a certain extent, avoidable and costly friction. And it might not be the lawyer's fault or a financial institution's, it's the infrastructure's fault, to be clear. All right, not even the broker. So I'm just saying the whole process, needs to be updated. All right. In order to build the necessary trust between these intermediaries and to ensure compliance, a large amount of paperwork is required. Exactly. And what are we focused on? Thanks to, COVID and all of this and this pandemic, digitization. So we're becoming more and more paperless as well, just like cashless, less cash. I didn't say cash is gone. I'm just saying it's less than before. Trends are your friends. These burdensome, can't even talk, circumstances lead to increased costs and time expenditure if real estate is tokenized, and this is just one example. However, inefficient and timely processes via intermediaries are becoming obsolete because the blockchain is based on the principle of peer-to-peer, person-to-person, P2P. Again, not, or it could be B2P, directly business to person, business to consumer, directly without a middleman. Very powerful. Blockchain tech therefore creates trust between two contractual partners, people, and guarantees safe processing thanks to its technical basis. It increases transparency and automation while allowing the international transfer of tokens, shares of real estate in a matter of seconds. No more waiting 2 weeks, no more paying 4% when you sign this or pay this fee. It's ridiculous. All right. And then last but not least, and we'll keep going, real estate in itself is not mobile, and the sales acquisition processes are very complex. Many parts to it, and it's a longer process. But with this and automation and smart contracts and if and then statements that are pre-programmed, you could probably, sign a contract and get through multiple contracts instantaneously rather than just waiting, a week or signing 5 today and then, a month later you have to sign the final paper, right? So in addition, unforeseeable events such as construction errors and natural disasters can have a negative impact on liquidity today. While blockchain cannot counter physical risk, it does allow solution processes to be designed in an efficient and cost-effective manner. Always, and there's always going to be those coulda, woulda, shoulda scenarios, but ideally the regular flow of information and data will flow a lot more seamlessly overall. So this greatly increases liquidity and mitigates the negative impact. Most importantly, a huge increase in liquidity is generated by the possibility of fragmenting real estate investments by tokenization. That is, offering smaller shares efficiently and at any desired price, and the associated partial tokenization. Now, with greater liquidity, of course, means less volatility, which means that you can get more bang for your buck, and which may incentivize more of us to invest and get into the market. Then there's more money. What happens when there's more money in these markets? More investments, more building, more construction, more developments. You see what I'm getting with this? It's a self-fulfilling process or prophecy. Just like a flywheel effect, that ripple, it's almost like they know. As explained time and time again. All right, right here, guys, I'm just going to speed through this one. So VanEck, we've talked about them before. They file for a digital asset ETF. As we know, there's ETPs, ETFs, all of these. And what's interesting is this. So the fund will invest in companies that generate at least 50% of their revenue from digital asset projects or developing projects. Notice this. It should be noted, however, the term digital asset industry is by and large a broad terminology for companies that operate digital asset exchanges, payment gateways, mining operations, software services, equipment, and technology. This may well mean that there is potential for companies like Coinbase to be included in the fund after a successful IPO. I think investing in the infrastructure is a very, very smart thing to do. The returns may be a little less sometimes, but I think they're a lot more guaranteed. Now, with crypto assets, I obviously have a lot of exposure as a personal choice, but this could be another way to, it would lower the potential outcome, but definitely may be a lot more sustainable. Because with crypto, it could be all or nothing. And I mean, if you have one of your 10 projects that hit, you're good to go. But with this, this is more so like guaranteed revenue, or at least a cash flow, provided the ecosystem is still around. And this reminds me a lot of what Anthony Pompliano does. He doesn't really own crypto, as he shared, and he's kind of quiet about it. But then he explains, well, I invest in the infrastructure. I invest in the exchanges and the technology. And I'm not bashing that. I think that's very smart. But if I'm talking about crypto every day and I'm saying Bitcoin is the best asset ever, I would, probably hold a lot as a personal choice. But hey, to each their own. All right. So right here, guys, this is the World Economic Forum Digital Currency Governance Consortium. So we talked about this. 2021 just came out. We can see role of public sector and public-private operation or cooperation in digital currency growth, CBDC technologies, decision frameworks, blah, 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 blah. We've been watching this for several years, stable coins. But truth be told, this is happening sooner than later. And of course, we do know one specific ledger, XRP ledger, cough, cough, has many, many features for issuing stable coins and connecting these repositories of value. And also, before I forget, guys, the DeFi projects that I do absolutely like, and I have to look into more, don't get me wrong. Of course, I'm familiar with like Uniswap and all those guys. Where are we? But right here, I'm big into, Kava specifically. I've done a video on Kava before. Talked about Comp as well, and they have a lot of, they're available on a lot of exchanges. I believe Kava will be added to Coinbase shortly. If you remember their July blog, it was on the list. Same with like Fetch AI and also HBAR were on the list to be added to Coinbase in July, and Ocean. So there's a lot of DeFi projects out there. SNX is one I do like as well. XTC, provided just like every crypto, if it gets a lot of liquidity, it can be very, very successful. All right, just kind of going through this. Elrond, of course, Aave, a lot of solid projects. Link I do hold. GRT, I don't really know too much about it. I did all the Coinbase earn and got that though. Cody is one I think I really missed. I should probably look into it more. Some of the smart people that really hit me up and give me those secret sleepers that go up 500%. They said Cody a while ago, so I'm probably super late to that party, but hey, it is what it is. All right. Talked about the digital currency governance. I'm just going to say DCG. And right here as well, Digital Currency Governance Consortium. So highly recommend looking into this, keeping up with it. Yes, I know it's bland for us researchers that really go in deep and really understand the ecosystem, and we're watching all the experienced people, but we really have to understand what is happening. And again, commercial real estate is one of the easiest to start with, and it's already live in certain regions. So nonetheless, very exciting for that. And then if we remember the Ripple's head of DeFi, Mr. Zachowski, we're expecting the asset tokenization trend to accelerate on the XRP ledger, particularly stablecoin issuance with multiple production deployments in corporate products built on new and improved tooling. Now I know I say this a lot, Central Bank of France is one of these central banks that I've seen that specifically said XRP ledger and Ethereum blockchain in those documents last February. These are the things that I remember. These are the things that I consider. All right, let me see if there's anything else. The year of CBDCs, of course, we do know, let's see, right here, United States Federal Reserve is collaborating on research with MIT's Digital Currency Initiative. We know what, their obvious connections to Algorand have shown that they've, Algorand joined the Digital Currency Initiative, and Algorand Foundation is essentially out of MIT, for those of you that, I'm sure all of you know that at this point. But yeah, keep your eyes peeled, guys. Anything can happen in this market. Stay positive, stay confident with XRP. Understand that this is, a multi-dimensional lawsuit. It's not just against XRP. If anything, it's against, the executives and the company's holdings and the escrow and maybe non-compliant sales early on that other crypto firms have been hit with in the past. So to me, I do not think it is the death of XRP whatsoever. I see comments on YouTube videos that say XRP is dead. I've been seeing that, and I've been seeing Bitcoin is dead for, 4 years at this point. So to each their own, guys. I'm going to stay in my lane. I'm going to keep accumulating these assets because I believe that I'm not going to be shooken out right before the fun gets started for good. So be sure to like and sub. Hopefully you enjoyed, and comment down your favorite DeFi projects for me to check out, and I will catch you in the next video.